Hi, this is Keith Schneider, CEO of MarketCage.com, and this is June 18th edition of Market Outlook. So first thing to note here is that the diamonds or the Dow Industrials actually closed positive for the week, counter to the rest of the key indices. So Dow value stocks definitely picking up the steam relative to what had been outperforming, which is the Nasdaq 100. So there's a clear rotation into value and industrial stocks, which are represented by the Dow. Now, in terms of volume, volume is also confirming what is happening in the price structure. So as you can see, we picked up accumulation days in what had been lagging, which is the Dow, and we have 4 distribution days now in the S&P, and we have, in general, more distribution days than accumulation days across the board. So this is clearly indicating a change in structure of the market where diamonds and institutional volume, or the Dow, is getting the attention and the price performance, while people are liquidating the other indices and they're going under distribution. If we drill down a little bit deeper, we can see that the sell-off has also been led by what had been leading. Semiconductors, technology, you can see down 1.8 and 1.4% respectively. Now, what is also of interest to note is that a risk-off indicator looking at the relationship between the S&P 500 and the utilities is continuing to persist. So you definitely, from this type of indicator, showing risk off. So you've got a situation where the 5-day return on utilities is 0.9% plus, where the S&P is 0.3% negative. Now, a couple of other things to note is obviously energy and retail, which has been terribly lagging, continues. Retail really got hit with Amazon purchasing Whole Foods and the implication across the board for retailers, including pharmacies like CVS, et cetera. And so that has been under pressure as well. All right, so you can see that definite movement out of growth stocks, semiconductors, and technology. And in fact, the key FANG stocks and a couple of the other leading tech stocks have all been hit pretty hard and have not really recovered, with the exception of Tesla, which actually hit all-time new highs this past week. All right, so let's take a look at some market internals. Okay, so what we're going to take a look at here is the Nasdaq composite. And as you can see, we've got up-down volume on the top chart here. It's broken through a key midpoint level. And we had been noting that we really couldn't get really strong readings across the board in the Nasdaq 100 and in this composite. And now you're breaking down across the board in all 3 of our market internals. So you can see here, you got a situation where you're breaking down through the midpoint, again, breaking down through the midpoint on the McClellan, which looks out over the next 2 to 3 weeks, and advanced declines on a 10-day basis has also turned down. So we've got a lot more room on the downside here. So I would look for resumed pressure to continue in NASDAQ based on these particular readings. So in essence, the Dow is going to have to fight the overall effect of the composite, and possibly maybe we'll find some support just under the 50-day moving average, which would be enough to get a lot of people who are trend followers using the 50-day moving average and their weak holders to get out and possibly then stage a rally off of that. But right now, clearly under pressure in NASDAQ. Another chart I'd like to highlight here is taking a look at the NASDAQ new high, new low ratio. So one of the things you can clearly see is that we've actually now fallen with this test here of that 50-day moving average, a move below our 70% level. And that's sort of a demarcation and a good level. We like to say that anything above this level is generally fairly bullish. You may get some short-term corrections, but the overall trend is intact once you stay above that 70% level. Now, in this case, we reached just above it as we were hitting new highs. And of course, now we're rolling over here. And a key level to hold is that 50-day moving average. So you definitely don't want to penetrate that. You've got some critical support right around that 50-day, both in price action over the last week or two, and then going back over the last month and a half or so. So critical price action right at that 50-day moving average. Keep an eye on it. And as you can see, we're definitely getting some deterioration in Nasdaq. But on the flip side, the Dow closing at all-time new highs can't really argue with that overall scenario. So that's it for now. See you next week. And definitely keep an eye. Come back to these pages. See how things are moving, either improving or deteriorating. Again, the key here is watching that Nasdaq that can drag everything down. You got things at a critical support level. If it breaks that, could get renewed weakness. And on the flip side, you've got Dow that's really strong. If that holds up, that could certainly hold up the Nasdaq from really falling apart here and potentially holding. But the other piece of information is you definitely have a flattening of the yield curve. You got a rise, yet the third one, the old adage of the 2 steps and the stumble, 3 steps, you can definitely see some additional pressure. Okay, that's it for now. See you next week.